that. Well, let's get another fundamental opinion now. The market has cracked 1% in opening trade. Rakesh Arora of Macquarie Capital joins into this discussion and tells us what one should be doing now. Rakesh, hi, good morning. It's been, quite a weak morning of trade, and the market has now lost close to 6% since the start of the year. Is this an opportune time to be dipping in and buying some of the large cap stocks, or do you think you will get better levels in the course of the next couple of weeks?
See, I believe that the overnight panic reaction that we've seen to the weak ISM data is largely overdone. And we were expecting ISM data to come out weaker on some day because it was going well beyond where the US economy was really performing in terms of GDP growth, etc. And we believe that largely it was due to some large aircraft orders which were for export, which was really driving the ISM data in the previous few months. Now, coming to India, I mean, obviously there is a scare, and we expect Fed tapering to continue, and there is a little bit of risk of trade going to the international market. But most of these stocks have corrected quite a bit, and I'll be really surprised if correction really goes beyond another 4-5%. So I think time to really, take a dip and look at quality stocks and buy on declines.
Okay, but morning, Rakesh. Thanks a lot for joining. But would you be a buyer already, or do you think that things are going to get at least 5% cheaper?
See, difficult to say. I mean, like you were just discussing about the metal pack. I mean, the stocks have already corrected 18-20%. And obviously it was driven by the weak PMI data in China. Normally this is a seasonal weakness, and we are expecting Q2 would be better, and second half should be considerably better for China as compared to first half. So I would be tempted to really, buy at this juncture because stocks are already looking extremely attractive.
Rakesh, hi, morning. So that would be on top of your shopping list, metal stocks, and anything else apart from metals?
Yeah, so see, largely the way we are trying investors to position themselves is obviously to hold a core portfolio of exporters, which is IT and pharma, and to some extent metals, and then probably look to add, quality cyclical names like L&T, Axis Bank, ICICI Bank on declines, because once we start getting all these opinion polls and things are saying that we get a stable government, a P re-rating will happen. And there's a chance that it might happen even pre-election. Okay. So I would be tempted to, add on this current weakness.
Okay, Rakesh, we're coming to you in a minute with more perspective on the contagious sell-off that we are seeing across Asian markets. But we have another expert as well joining in, Gautam Shah of JM Financial. Gautam, what is your opinion on this 5970 getting violated? At this point in time, would you continue to short? As well, your view on the bank Nifty, which is now in 4 digits?
Well, Lata, I think the setup continues to be quite negative. I think what we've seen in the recent past is a very gradual and frustrating kind of a turnaround. And clearly the bears seem to be in complete control of the setup because this leg of the decline has been led by global factors. I mean, our markets just did not have the ammunition to clear 6350 because some of the index heavyweight sectors like Bank Nifty and oil and gas just refused to participate. And now with some of the outperforming sectors like IT and metals, coming off significantly, I think that's a clear sign of concern, and it suggests that the market is unlikely to hold this 56,000 support, which has worked very well in favor of the bulls in the last 2.5 months. And looking at the current momentum on the way down, the global scenario, the sectoral performance, and the fact that there are no major events to look forward to in the month of February, I think this market is clearly headed further lower. The levels that we are watching on the downside is 58.10, which could be a stopover level. But eventually, I think the chances of the Nifty hitting 5700 are pretty high. The only consolation the bulls have right now is the fact that the markets are a little oversold, having corrected significantly in the last 5 days. That could lead to some pullback, but I think any pullback will be restricted to 61-6150. So any small rebound in the next few trading sessions because of this setup, I think should be used as a selling opportunity.
Okay, Gautam, hi, morning. You track the US indices as well closely. The S&P has actually slipped below that 1750 mark. What would be the markers to watch there? Because that will, determine the trend for us as well.
Well, yes, totally. I think the US markets have seen a pretty important break of supports in the last 1 week. This is something that we've not seen for a long time. You know, the US markets have been rock steady for the last 1.5 years with small corrections from time to time. But this correction actually tells you that it might just be a reversal and not just a temporary correction. And I think the kind of breakdown that we've seen in the last few days, particularly below 15,600 on the Dow, it suggests that the Dow is heading towards that medium-term support of 14,700. If you remember, this level has worked very well in favor of the Dow in the second half of last year. So 14.7 is our target for the Dow, in the first half of this year, and that would correspond to about 1680 on the S&P. But more than the Dow and the S&P, I think what concerns us is the setup for the Chinese market. You know, that's seen a very, very important breakdown in the last 1 week, calling for another 10 to 12% decline. And given all the news flow in the last few days, it seems that this Chinese market decline will have a serious impact for our market.
Gautam, you did say 5,700, 5,800. That's also October lows. If that breaks, is there a risk of this market going back to those August lows of about 5,200 or so? Or do you think that's not a possibility right now?
Well, that would really be a half glass empty kind of an approach. Frankly, I wouldn't want to go that far. I think you have a lot of events lined up in the next few months in terms of results and in terms of the political scenario, which seems to be quite fluid. So we would want to take it one step at a time. And I would like to believe that this market is seeing a nice consolidation before it actually sets up for a breakout on the upside. So while from a short-term angle the market is weak, I think closer to 5,700, we would like to believe that the market becomes a strong buy, because our eventual view is that 2014 as a year should pan out in favor of investors. So towards 57, 5,800, I think it's a great buying opportunity.
Okay, that aligns you with what Rakesh Arora has been telling us anyway. Rakesh, what gives you the confidence that this contagious selling that we're seeing across Asia is not going to pan out like it did in May, June, July? After all, now money is actually drying up.
That's correct, and I think the focus would be on most of these emerging countries to restructure and bring in reforms. So whichever country is, fast enough on reforms, that is where the money will flow to. Now, for India's perspective, I think because elections are such a big event, at least in terms of perception, I think any news around those elections would be a big driver. So whether the new government will be able to actually put in reforms, etc., it's still a few months away. But in run-up to the election and probably post the election results, at least till June, July, this is the only event which is going to make an impact. And if opinion polls really, show a stable government, then probably we are in for a re-rating. So I won't really panic here too much. And I think the concerns on China are also, overblown. And same on the ISM data yesterday night. So time to actually buy on dips.
All right, guys, thanks so much for joining us and taking us through your view. So that's the word coming in from Macquarie and GM Financials. GM Financials believes that this market could be headed lower, but when it reaches that 57, 5,800 level, it will be a good buying opportunity. This morning